Alright everyone, welcome to the channel. So in today's video I'm going to be showing you how on TradingView you can calculate both death crosses and golden crosses with two simple moving averages. Now let's jump right into the video. Now to start with, what is a death cross and what is a golden cross? Let's start off with a death cross. Well, a death cross is simply where this blue line converges below this yellow line. This blue line is your 50-day simple moving average, and this yellow line is simply your 200-day simple moving average. Now, what does that mean in layman's terms? Well, it simply means that this blue line here, which is the 50-day moving average, this takes in data points from the past 50 days. When this crosses below your 200-day moving average, it simply means that the data in the past 50 days has been more bearish than the data in the past 200 days. And as you can see, we would have a death cross. Now, death crosses and golden crosses are both lagging indicators. They pretty much tell you what you already know in the market. For example, you could see when Bitcoin was up here at 65,000 basically, we didn't have a death cross until 42,000 and we bottomed at 28,000. So this fired, more than halfway down on the cycle. So bear in mind, these are lagging indicators. Now, what is a golden cross? A golden cross is where this blue line crosses the yellow line. And once again, the blue line is your 50-day moving average and the yellow line is your 200-day moving average. What does this mean in layman's terms? It simply means that the last 50 days worth of data traded has been more bullish than the last 200 days worth of data traded. So let's jump into how you can add these on your chart. Let's start off by removing everything. So we'll jump through everything with Scratch View. Now, go up to the top left of your screen and you'll notice this indicator tab. Now, you want to type in moving average and click this twice so you get two separate moving average indicators on the left side of your screen on TradingView. So as you can see here, we have your moving averages. Now, all we're going to do is edit them. Now, if this is your first time using moving averages on TradingView, if you come down to the methods down here, you might notice that it says EMA, which stands for exponential moving average, instead of SMA, which is the simple moving average. You'll want to switch this over to SMA for both of these moving averages. Now, what we're going to do is we're going to go into the length and we're going to type 200 to get the 200-day simple moving average. And we're going to click on the time frame of the chart and we're going to click on daily. This simply means that if we did go into a different time frame, like the 4-hour, the weekly, the daily, the hourly, then the 1-day moving average, or the 200-day moving average rather, would stay the exact same. And like we said, we're going to mark this yellow, and then you just want to click OK, and there you go, you've got your 200-day moving average on the chart. Now we're going to select the other moving average, which isn't the color that we just edited. Once again, make sure that you have SMA instead of EMA. Change the time frame over to the daily, and then you want to type in the number 50. And as you can see, we've perfectly set our chart up to keep an eye on either death crosses when the 50-day moving average tanks below the 200-day, or setting up to see golden crosses when the 50-day pumps above the 200-day. Like I said, these are delayed moving averages. They basically already tell you what you know. That's all I've got. I would definitely keep an eye on golden crosses and death crosses in the future. Historically, normally when we have a golden cross, we normally dump and pump into the price. And when we have death crosses, at least from what I've noticed on the Bitcoin chart, we dump into them and then pump into them just before they close, and then we normally get a little bit of a flush out before we do continue the dump. You can see here we broke down. We tried to have a tiny bounce. This was a really underwhelming bounce, but we tried to pump into it and then you dumped afterwards. And like I said, the bottom was not far out from where we actually did fire these, which is why I'm saying these are lagging indicators. So that is how to set up TradingView to keep an eye on your 200-day moving average, your 50-day moving average, but most importantly, keeping an eye on these death crosses and golden crosses. That's all I've got for you today. Hope you found value in this video. As always, cowboy out. Peace.